Welcome back to another one, guys. Kalisa here. Someone in the Telegram group asked me to elaborate more on entries and targets on US30. So this is a quick video just to elaborate more on how I set my target levels and how I get into trades. Let's jump right in. So let's first look at bullish structure. Let's just quickly recap. Bullish structure is when price is making higher lows and higher highs. This is where price is increasing. Price is going up. As we make these higher highs, we're always trying to get in on a lower high. So you have the high, higher low, higher high, higher low, higher high, and higher low. So whenever price is making these swings up, that's when we're trying to get in on a cheaper price. I.e., if price moves up, when it comes back down, it becomes a bit cheaper. We buy it here and ride the wave up, and then it will reach a level which it will reverse from for a counter trend trade to come back down. So this is what would be the major trend. Then you'd get what would be the counter trend would be this on a lower time frame. Okay, so that's the lower time frame counter trend. Then you have the impulse. Then again, you'll have the lower time frame counter trend. So you always need to know which part of the move you're in. The easiest way to know that is whichever time frame you analyze from. So let's say you're looking at the daily or the 4 hourly, that will be your major trend. Then your counter trend timeline would be, let's say, on like the 15-minute. So on the 15-minute, you might find that on this part of the leg, the 15-minute is making lower lows and lower highs. Price is coming down. But you're only in this section of the move. And then, of course, it will then turn around and it'll start creating higher highs to rejoin the major trend, which is on the higher time frame. So let's just quickly go over that so we can clean this up so it makes a bit more sense. So you can see I'm on the 4-hour time frame. So we have higher high, higher low, higher high, higher low, higher high, lows held, and then a new high. And we break this low, we come down. On the low, we test the low again, reject, we finally break the low, then lower high, lower low, lower high, lower low. So this area here is where it went from a bullish trend to a bearish trend. Okay, this section is where it changed from making higher highs to higher highs and higher lows to lower highs and lower lows. So as for the entries, how do we get into the entries? So there are two types of entries that I look at, or 2 times I look to enter, which is the retest entry or the lows held entry. So the retest entry is this, what you see here. We have this level, this high being held. We then have price break above and retest. This retest level is where I'd look to enter to then ride the price up. The second one is the lows held entry, which is this one here, where lows are held, we don't break below, and we take this price all the way back up to these previous highs or to a further level if we can see one. So those are the 2 times I'm entering, on the retest or if the lows are held. This just shows me that the price is going to continue in the same direction. So what I'll do is, if I'm on a 4-hour, like as you can see now, I would go down to the lower time frame once this area is broken, go to the lower time frame and wait for the retest on the 1 hour to 15-minute, and wait for a retrace and wait for a reaction on these levels or this level. Then when I get the reaction, that's when I'll take the trade, which we'll go to in further detail in a second. So that's the bullish side. The bearish side is the same thing. So we'd have lower lows, lower highs, lower lows, lower highs, and lower lows. So again, the entries would be the same. Either this level is being held, so where price has retraced, so price drops down here, comes back up, this high is held, and then sell it back down. Price is held, sell it back down. Or this level here being the retest. You can see price fell below, retested, and came back down to this low. So I would have sold from this level back down here to the previous lows, or a future target if I could see one. And the held, this is the highest held. So price action on the lower time frame here should give us a bearish variation for a reversal, which would then trade back down to these lows or a further down target. So that's keeping it really simple, that those are 2 times I enter on a retest, or if the lows are held in a bullish structure, if it's a bearish structure, if the highs are held moving bearish, or if it's in a retest and again we're continuing bearish. So those are the 2 areas. So we're going to go into the lower time frame to see this exact scenario. So you can see right now we're on the 4 hour. We're going to go to the 1 hour. Where's it gone? Here we are. So what do we see? Once we break above, you can see this area here, these highs are being held, and you can see this low is being held. So price was just moving sideways and ping-ponging, ping-ponging. Once it broke above, we then had this retest. So we've gone from the 4-hour being our major trend. We've now come down to the 1-hour, which we're seeing that what I'm looking out for is two things. Number one, price action, which is or price action reversal candles, i.e. most usually the bullish engulfing candle. So this candle here, this candle here, this candle here. The reason I look for these is because it shows us that there are more buyers in that time or for that hour, because we're in the hour time frame, more buyers in the hour than on the than previously, and also it's because the reaction is on the level that we're looking for that reaction from, so the retest level. So if let's say we got a bullish engulfing somewhere up here, for me it wouldn't count. The bullish engulfing needs to be at the reaction level. Now that would be the same thing over here. So this is where the lows are held. So this was the retest. You can see there's a few other things that we do look out for, but just to keep this brief, this bullish engulfing candle would have been a good price to take. However, usually I like to I like for price to consolidate. So either this bullish engulfing or even this hammer candle. As you can see, there's a lot more buys in this candle here. Again, as I mentioned, there's a few more things we'd like to look out for, but that will be the buy entry, and then we can then target future areas. There are some more in-depth entries. So, for example, how or when to wait for this entry instead, and just take it right there, which will give you a better risk reward. And then again, you can target the highs or future target levels. Another one. So this is the second one, which is if the lows are held. So you can see that price broke above, created this level here, came up, bounced off that same level, created a new high. It confirmed this being the low with this low here, this rejection, and it's turned back around again. So I wouldn't have been looking for sales unless, as mentioned before, price broke down, retest this area, and then continue back down. That's when I'll be looking for sales. If price is above the lows, then I'm always going to be looking for buy positions. So as we can see, same thing again. Price came down with bearish price movement, came all the way down. We had a hammer candle, we had this range, and then we finally had this big bullish engulfing candle because we had price come down here, grab the liquidity from all these buyers, and then engulfed all the way up. So there would have been my entry, and my stops would have been below, and I would have been targeting this high or future targets if I could see them, which would be on another video. And I could have looked to scale in. So, for example, something like over here, you can see price was retracing, came down, tested this lower time frame support level. So on the 15-minute, for example, you would have seen this. I can see this just straight off, just by looking at the chart. 15-minute would have created a little high, retest this little high that would have been that we would have broken. Which if we spread it all the way across, let me just quickly get rid of this. If we spread this across, you can see that it would have been this little high as well, and this. So there would have been a support level, turned resistance, resistance level again, turned support again. So this would have been another good area. You can see the bullish engulfing candle right here, or this one. This one would have been a safer bet. You could have scaled in, gone for those target highs again. So you'd have got a 1.63 real score to the first one, and the second trade would have got you 1.89 if you're risking 1%. Of course, if you're risking 2% or 3%, then again, just multiply those by 3. So those are the two examples for the bullish trends. So if we just scoot over to go to the bearish trends, it's the same thing. We can see that price here broke below, as I mentioned before. Only when price has broken below, we retest. That's when we look to get in. Now, sometimes price may not retest the exact level it's broken. As you can see here, price broke below and it didn't retest this level properly, i.e. price did not move away and then create a counter trend to then enter, to then retest that level. It just continued falling down. This is what I call just a created resistance. So as price moved down, it came back up to this structure level, came back down, came back up to a similar structure level. So for me, this now becomes the high. So I would no longer look for a retest at this level. I wouldn't mind getting in on anywhere in this level here, in this area here, to take sales back down to these levels, or to, again, future target levels, future target areas, should I say. So when I'm getting on in this area, it's the same exact thing. I'm looking for a bearish engulfing candle. So price has come all the way back up. It's tapped into this area. It's also tapped previous supply, bearish engulfing candle. I would count this as one because there was way more sellers in this candle than this previous 1 hour candle. If you wanted, you could have waited possibly to see what happens afterwards. Again, this is more in-depth trading later on that we can explain. So this would have been the candle. Stops would have been above the high. And again, targeting these lows or the future targets as mentioned. Or you could have waited for this bearish engulfing. If you missed this one, you could have got this bearish engulfing as it tapped into those same highs. Again, stops above the high, targeting the lows, which of course doesn't give a good risk reward. So you have to target future lows, future targets, sorry, further down. Now, you wouldn't have known that this price was going to come back. So if you missed it, you may have just, of course, been out of luck to get this entry. But sometimes price does come back up. So you've always just got to be vigilant. If you missed this entry because you didn't enter it right here, and then it just kind of started ping-ponging around and you weren't sure, just always remember, as long as you're still below these structure levels, you're still bearish. So just keep that in mind. So if you would have entered there, you'd have targeted further levels further down, and then you could have scaled in at any point when we broke these support levels. So we start trickling down, minor retest on a lower time frame, as you can see here, and continue further down. Then you can also see, so that's the created high, and the highs were held, and this is then the retest. So retest, price is broken below, price is retested, and then it's continued back down to these previous lows. So here I would have waited for, again, a reaction on the retest level for a bearish engulfing candle, which I would have on here, as there's no bearish engulfing candle, I would have seen this reaction, the 1, 2, 3 candles with three bear hammers. So this is a bearish hammer, another bearish hammer. I would have taken this second one, as this one is still kind of above that level, but this one broke below that level again. Price stopped above, and then targeting again those lows or future target projections. As you can see, if you did try to target anything further, you would have been stopped out, or if you moved to break even, you'd have been okay. So those are the entries, pretty simply, and the targets as well. So targets being previous highs or previous lows. So that's a previous low you'd have targeted. Or if you're bullish, you'd have targeted, if it's a short retest, like this one is very short and your entries here and your stops are below, this is a very small target. So you'd have had to look for a future target, which is further up. If your lows are held like this, I always target the previous high. I rarely go for a future target because it's a deep retracement. So you don't know whether it's going to continue all the way bullish. The reason why on this one, you can target future highs is because you've got so much volume coming up and it's a short retracement, meaning price only came down a little bit before buyers step back in with huge volume, meaning it probably still has a further, a longer way to go. So when price is held, i.e. on the lows, i.e. this area here, I just target these highs. And as you can see there, price would have hit target very well. So that's it in a nutshell in terms of the structure, the entries, and the targets. Now, counter trend trades, I rarely take, but for targets for those. So let's say, for example, you are trading this. So let's say price has come up, and I want to get into this counter trend trade before I then look for the buy trades when it comes back down to the lows. I would target supply or demand levels. So of course, if we're bullish, I'm going to target demand levels. So wherever you see bullish engulf, wherever you see big bull volume come in, and it will break the highs, I'll always target whichever comes first, i.e. a bear candle previously that was not retested. So can you see this candle here and this candle here? This was the latest candle. Price wicked above. This one price wicked above. Then this is the price action that broke it. I would have targeted this level as a retest. So if I was counter trend trading and I got into this sell, I would have been targeting that level there. As you can see, the risk reward is not that great. So I rarely take counter trend trades. I'd only take counter trend trades if the time frame is much larger or I'm on a much smaller time frame. So I'd have to be, let's say, on the 5-minute time frame here, and then trading it all the way down to that level. I'm hoping that makes sense and it's clear. So I rarely take counter trend trades. I'm always just looking for the major trends, just keep running it up. They're usually more safer as well, because if you try to get the counter trend, you might get faked out and price could just continue all the way bullish. I mean, you can see this area here when we broke. We left some highs here that weren't, we didn't really retest. Price New York opened at 4 o'clock and just shot all the way up. So you could have entered the counter trend trade here thinking, yeah, price is going to continue down because it's a weak top and then close bearish here. You sell, targeting these areas here, and then you got faked out and price continued all the way back up. That's the reason why I'm always looking out for the major trends and just trading along those trends. Hope that keeps it simple and easy for you guys. If you've got any questions, just head over to my free Telegram group. It's in the link there's a link in the description below. So on there, you can always ask me all the questions that you have, or me to break down anything in detail. Catch you again soon.